Hello and welcome, everybody. My name is Sarah Snell Cooke, and of course, I am your host here at the Credit Union Connection. I am here today with these lovely, lovely people from Momentum. On my right is Whitney Loe, VP of Sales and Partner Engagement. Welcome.
Thank you.
And on the left, there is Jay Speidell, who is the Marketing Manager over at Momentum. Welcome.
Thanks.
And so I'll give you each a quick chance to introduce yourselves and Momentum. Whitney, you want to go first?
Yeah, sure. Well, thank you for having us today. Like you said earlier, I am the VP of Sales and Partner Engagement at Momentum. I've been here about 14 months, but I've been working with Momentum in several different capacities, probably for the last 5 or 6 years. So I have a background, actually, I started in banking, then worked in credit unions and moved over to the partner side, I think in 2015. I started with CU Direct, which is now Origins, and I have made my way here with Momentum. I love working with credit unions. It's been a big passion of mine for a long time. I think I really drank the Kool-Aid in 2014 during my first crash experience at the GAC. It's been a great ride, and now I get to work with the wonderful people at Momentum. And Jay, as our marketing manager, I'll let you tell a little bit about yourself. But he and I work together every day. We have a lot of fun.
All right, go for it, Jay.
I'm the marketing manager at Momentum. I've been here just about 9 years, and I do a little bit of everything. So, if you got a proposal, I'm the one who put that together. I write all our content. I manage the website. I do marketing strategy. I work a lot with the sales team, with Whitney and Mark and Bob. And yeah, it's just been exciting to, learn about the credit union industry and be able to contribute in some capacity, writing content and, helping people learn.
Yeah.
Yep,
I call
yep.
him the jack of all trades. That's really what he is. He does
Oh, so
everything.
it's Jack, not
Yeah,
Jay.
well, yeah, not
Okay.
Jack, not Jay. Yeah. Yeah, we would be so lost without Jay. So,
Jay, branching has changed dramatically over the last couple of decades. Credit unions are looking for smaller footprints and more technology. There are fewer credit unions, a lot fewer credit unions than when I started, but the same number of branches that are being operated for the most part. And, we've got the lead certification, so the greening of the branch. What are the latest trends that you're seeing in branching?
The latest trends are sort of a continuation of what a bunch of credit unions were sort of pioneering several years ago, and it's sort of maturing and spreading throughout the credit union industry. So you've got the changing purpose of the branch, which I'm sure everyone knows about, as more of the branch interactions move from transactions, which are kind of expensive and don't bring a lot of value to the credit union, towards relationship-based interactions, which bring incredible value to both the member and the credit union itself. Um, and this is really the driving force between pretty much every change that we're seeing in the credit union industry. So as more transactions shift to digital, a lot of credit unions were looking to invest in digital technology in the branch, but a lot of it was done initially without a lot of purpose. We've all seen those iPad stations that never get used. So the real innovation is just having purpose behind every decision that's made in the branch. So one of the things that's interesting is that as there's more technology in a lot of these branches, we're actually seeing less technology. So the technology is sort of falling behind the scenes and helping drive these member interactions. So, we're going from the teller stations to laptops that staff can carry around and meet with members throughout the branch. The stations are being replaced with cash recyclers, which they allow the branch to still fulfill its function as servicing transactions, but it just sort of brings the emphasis more to conversations. So, when a member comes in, they can have every single need serviced, but they can also, come in and just have a natural greeting and interaction with the staff member. and talk about any of the more complex issues that they come in with. And as far as the branch footprint, this has dramatically reduced the amount of space that branches need. And so this is kind of what's driving the smaller branches. So this is what's driving smaller branches. And this has had a lot of different impacts on, branch operations, because while the branch footprint needs are shrinking, the ideal spaces aren't. So we're seeing a lot of credit unions looking to make use of a large footprint, even though they only need a smaller area of that for the branch front of house. And that means, for example, Blue Peak Credit Union, they've got an ITM contact center in the back of the branch. And one of the really interesting things about that is that they're actually rotating staff in between the front of house and back of house. So a lot of their sort of older membership base, they were resistant to the idea of sort of technology replacing people's jobs, but they were able to cut through that and gain a lot of ITM adoption just by the members seeing like, hey, this is the same person I saw at the in the branch, last week. I'm looking at that same person on the ITM, and they're just in the back of this branch. So that's one way that technology integration has intersected with the smaller footprint, and just more possibilities that have opened up due to this, what was seen as a problem before, the mismatch between the available real estate footprints in good locations versus the space needs of the branch.
Yeah, makes sense. I would love to see, where the Taco Bell and the KFC they're together. If they could get like a Taco Bell in my credit union, that'd be awesome.
Yeah, and we actually have
Yeah.
Ocean Air, which was formerly until very recently CBC Federal Credit Union. They've actually got a partnership with Dunkin', where
Oh, really? That's perfect.
yeah, so their Camarillo Road branch is co-located with a Dunkin', and it's been really cool. So they had a huge space, but they're in an ideal location. So as their branch needs diminished, or their footprint needs diminished, they actually, partner with this Dunkin', and they have a shared lobby. So, members and customers of Dunkin' Donuts are just hanging out here. And one of the really cool sort of unintended benefits of this was that they've actually recruited Dunkin' customers as staff members.
Oh, staff.
Yeah,
Or they could steal the Dunkin'
members as
employees.
well,
Yes.
but they've actually, managed to fill positions from the Dunkin' customer base, which has been really cool.
Yeah.
Yeah.
And we've also seen, as credit unions merge, we're seeing fewer credit unions with the same number of branches. And one of the reasons for this, and kind of the story behind why there have been so many branch closures over the past few decades, is a lot of the bigger institutions had kind of overbuilt and overextended themselves. And then as mergers happened, these institutions were sort of cannibalizing themselves with market overlap between their branches. So we're seeing the larger institutions reducing their branches, but the credit unions are actually increasing their number of branches because they're looking to, they're in an expansion phase, and they're looking to cover new markets and compete. And when it's two of your own branches in an area, that's cannibalization, but they're placing their branches to compete with the big banks and grow their membership bases. So that's why we're seeing this sort of paradox of the number, or this sort of like sort of contradicting stories of the total number of branches is going down, but the number of branches per credit union is going up.
Right. Yep. Very, very cool. Especially as you like Bank of America, they shutting down all their drive-throughs and things like that. Credit unions
they're shutting down all their drive-throughs. They're cutting their number of branches, but we've also seen Chase and PNC have announced plans this year and over the next few years to actually build hundreds of branches, renovate thousands more, and they're hiring a bunch of new staff to cover these areas. And what it stems from is demographic changes. So there's quite a variety of factors, but one of the biggest impacts was actually the pandemic. And once people could work from home, you saw people who no longer needed to commute deciding to relocate to areas where they could have a bigger home or a more affordable home. And this has caused like a dramatic shift in like where people are living. So what these some of these bigger institutions like Chase and PNC are realizing as they sort of shift from shrinking their branch network to increasing it is they're looking at their predictive analytics models and stuff like that, and they're realizing like, oh, there is new opportunity in the market that we are chasing. There are new markets emerging, and it's just an excellent growth opportunity for both these big banks. But if the credit unions can get ahead of them, it's a great opportunity for the credit unions to grow as well.
Yeah. And
no,
to Jay's point about that, because yeah, they're going to do 500 new branches. They're hiring 3,500 people within the next like 3 years. I mean, this isn't just a little, this is a lot. And I think the most telling thing, and I think, to Jay's point, what credit unions probably really need to be paying attention to is the fact that they are talking about going into underserved communities. So that's an area that Chase has not really been going after before, right? But I think they have taken up so much of the market. Obviously, they have locations in all the lower 48 states. So they're already spread obviously across the country, but now they're going to be going into these communities where they're underbanked and underserved. And I think credit unions need to be paying attention to that, because that might be an opportunity that we need to continue to capitalize on because of what our mission as credit unions are and what we do. But the whole branches are going away. To Jay's point, they're becoming consultative. They're not transactional anymore. But we are going to have more competition in our space, especially with people like Chase saying, hey, we're going to start going into these underserved communities. We're going to start changing the products that we're actually providing our customer base. And so we should all probably be paying attention to what's going on there. And if we're already in that underserved community and we don't have the footprint like we should, I think it's something everybody should be looking at, because for them to say that's what they're going to do over the next 3 years, that's a big change. I mean, 500 branches and 3,500 people in 3 years. It's a lot of footprint that they're be covering. So I think we definitely need to be paying attention to what's going on there and make sure that if we're not already serving those communities, what can we do to get there as well?
Yeah.
Yeah.
And I think, the credit unions that are in those communities have such a good connection with them. It would be a shame to lose it to freaking Bank of America or
Right,
Chase
exactly.
So,
Exactly.
yeah.
I
Yeah.
agree.
Jay, I'm sorry. I think you were starting to say something?
I was also going to talk about the sort of the greening of the branch and lead. And this is one of those really cool success stories of the credit union mission and other similar purpose-driven organizations with a commitment to the environment that sort of goes unsung. So back in the aughts and the 2010s, lead was sort of an expensive add-on, finding ways to deliver these projects sustainably, sourcing sustainable materials, sourcing sustainably made furniture. It was a challenge and it added cost to the projects. But credit unions made this investment. We have so many clients who invested in LEAD, and it sort of had a major impact beyond those individual credit unions facilities. Because what it did was it forced the supply chain to sort of rebuild itself as a more green supply chain. So all the processes and manufacturing techniques that were sort of, more expensive back then, this investment in LEED and green technology has caused the cost of these things to go down dramatically. So, the cost of sustainable construction materials, the way that furniture is built, even, and casework. So what we've seen is that these credit unions who invested in LEED early on, not only did they save money on their, you have all the other benefits of LEED is demonstrating your commitment to the environment, as well as lowering your operational costs with utilities and stuff like that. But they've actually managed to transform the entire supply chain so that green building is now the default, and making that extra leap to getting LEED certification is a much lower barrier than it used to be, and it's attainable on most projects.
Mm-hmm.
So it's kind of like these were small wins for the credit unions when they achieved LEED certification, but a big win for the environment and the construction industry as a whole, as the supply chain just totally transformed itself to become greener.
Mm-hmm.
And we're also seeing a lot of credit unions make this part of their brand. So one of the really interesting case studies is NIH Federal Credit Union. So they're serving, the healthcare workers and the health sciences industry. And they didn't want to integrate, direct connections to the hospital and environments like that in the branch environment, because, you get off work, you're stressed, you don't want to think about your rotations or your clinicals and stuff like that. You want to think about the impact that you've had and the reason why you go to work. So what they've done is they've made their branches sort of like about health and sustainability. So you go in and there's green walls, everything's sustainable, it has a natural welcome, healthy feeling. There's, air filtration, healthy clean air, and it just feels healthy. So what they're doing is they're using the sustainability sort of show rather than tell what their brand is. And I think that's really cool.
Always
It's cool. And
better
I think
to show.
that becomes part of that immersive experience that you hear a lot about today too, right? Like
Mhm.
people talk about when you go into whether you go into Target or any other large retailer, and we talk about this now in branches, is you want them to have that experience when they go and they feel immersed in whatever your brand is. And I think NIH did a really good job with that part by what Jay's talking about, by like when you walk in there, you actually feel something when you're in that branch. And I think that's something credit unions, when you're looking at your branding and going forward, especially changing and updating your branches, how can you take that brand and actually make that a feeling when you go into a location?
Yes, I always,
Yeah.
even in B2B marketing like I do, I would say find the feels.
Yes, yes, the feels, yeah. And I mean, and people do want that. They do want that type of experience. And I think there's several ways credit unions can look at doing that when as they're updating their branch, footprint and moving forward. But yeah, this whole immersive experience, I think, is going to become an even bigger thing as we continue to move forward with different types of branches that we're going to be seeing, I think, throughout the credit union community.
Cool. And I want to get back to something we touched on a little bit, Whitney, is that real estate transaction, location, 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 right?
Yes. Yeah. Yes.
How
Yeah.
have the demands and identification of prime real estate changed?
Well, so obviously, we've seen a lot of change through, the pandemic. You're seeing a lot of change, like we talked about earlier, where um, both banks and credit unions are moving to different communities, smaller communities, or into different areas they never thought about, because when this whole work from home after the pandemic, it definitely changed the real estate. But what we're seeing now is people are going back to work, right? Amazon's called everybody back into the office. Dell just went through this whole thing where basically either you come back to work or I'm sorry, you're gonna have to go, find another job. And as we see that, so we're gonna see a little bit shift right now. Now it's not just work from home. So that's gonna once again change the real estate footprint. Another thing that we're seeing too, though, is, with this work from home, that strategy that's been going on for a really long time, is people are not moving like they used to. So they're now staying longer in certain communities. So the housing market is not turning over as fast as it was. So that means there's less opportunity to get new members, right? To bring new members into your credit union, or if your bank bringing new customers, you're kind of you're kind of there. So that's changed the real estate footprint too. But now, really, if you want to put all of that aside, and what we're seeing now when you talk about location is where do you go? And used to, you'd get together and you'd all say, okay, well, there's a Target going in over there. So maybe we need to put like, a branch over there. Or there's this, you know, all these going up. Let's go look over there. Now we have this thing called, and at Momentum, we call it Momentum Location Intelligence. But we have partnered with Precisely, who was a spinoff of Pitney Bowes. And we have a true machine learning model that we can go in there and actually look at all of the competition around you. We can take your member data, compare it to the markets and the competition that you have, and we can tell you down to the intersection now where you should put a branch. And it's not just descriptive, it's prescriptive analytics. Like we are literally forecasting for you now based on the information we're gathering from you and the millions of touch points of data that we get with our partnership with Precisely. And we can tell you exactly where you need to be. We can tell you if you shut down this branch and open a branch over here, how long is it going to take you, to recapture that market? We can look at cannibalization. We can look at, do you want to go into an underserved community? What does that mean? An unbanked community. So now it's not just guessing. And so when you start looking at the real estate and the market, it's now saying, you know what, we've sat down, we've done the work, we're producing this market study, and we can tell our executives, our board members, and our members that we're going to this next location because it fits into what we're doing as a credit union and we can prove it with the data. So I think that's going to change our real estate market a lot going forward because I think it's going to become table stakes where if you're going to expand your branch footprint, if you're going to go into a new market or look at adjusting your existing branch footprint, then we can actually tell you how to make those changes and what that will do for your credit union before you ever purchase another piece of land or a building or start to remodel. So I think we're going to see a big, big shift. And it's actually really exciting, in my opinion, going forward to have data analytics because it's a big deal, right? Everybody wants data, and data touch points is what's helping drive us forward as an industry. And now we can not just say, hey, we have AI and data and fintechs, we have AI and data and machine learning in actual physical locations. So that's our big push right now. And I think we're going to see a big change in our real estate markets for people that are putting in branches based on that.
Yeah, and that kind
And
of gets to a point. Oh, I'm sorry. Go ahead, Jay.
oh, sorry. I just wanted to add on too that when we're launching this like Momentum Location Intelligence product, what we're really doing is we're bringing something in-house that we've actually been partnering with Precisely and their director of applied, I think it's director of applied location intelligence, Steve Reimers. We've actually been doing this for credit unions for about 2 decades. And we've got a lot of success stories going back, years of credit unions forecasting where their best branches will be, putting those branches there and seeing absolutely enormous success. And not only seeing like enormous success, but being able to help inform this, helping use the results of these forecasts to inform how they design and staff these branches. A great example would be the Verity neighborhood branching. So Verity Credit Union, they worked with us to develop their next 5 best branch locations, and they've been rolling that out for, I think it's about 10 years now. And each branch location that they've opened has just been incredible, the performance.
Yeah, I think that's particularly important. And Verity is a CDFI credit union. It's particularly important finding those
Yeah.
underserved areas
Yeah.
to serve before, the chases get there.
Exactly. Exactly.
And so getting back to the high tech, high touch kind of thing, Whitney, we've seen Cranians have to balance that obviously because they are known for the high touch service. How do you determine the best how do you determine and deliver the best ROI for a credit union and their members?
Right. So when you talk about high tech and high touch, you're exactly right. I think one of the best ways to deliver an ROI right now is I think your digital presence needs to match your physical presence. And what I mean is there needs to be continuity, right? So
Mhm.
if you have this great digital presence online and an online banking app and all and it's just, high tech, high touch, it's easy to do, but you walk into a branch that's not been updated or doesn't match what you're doing in your online presence, I think there's a disconnect. And it's been proven that if your branches match what's going on in your digital world, your members are going to feel more likely like to continue to bank with you and to stay with you and to feel like
Mhm.
you're taken care of. Because when you're only taking care of one part and you're not taking care of the other part, well, the whole point of going into the branches is usually now, or what we're moving towards. You have a problem you need to solve, or a goal that you need to accomplish, and you need to have that conversation with somebody. Well, that needs to match what you're doing in your digital world. So I think that's where you're going to get your biggest ROI going in. And then also when you talk about technology and branches, and back to what was Jay was saying, a lot of it should be seamless, but everybody needs to remember that just because one credit union does it one way doesn't mean you need to do it. And you need to even get down for like drill down even further. You might have one branch that doesn't have the technology of another branch, but there's going to be a reason why. When you're looking at a location and you're looking at a branch, you need to drill down to exactly what is going to work in this branch and in our community, and who are we trying to serve. And I think that's where you maximize your ROI, because you're not one size fits all and one branch fits all. So in my opinion, that's really what you need to be looking at. And that's where, like I said, that's where you're going to draw that continuity, maximize your ROI, but really make your members that are going to come into that branch feel like you understand them and what they're doing.
Mhm.
So yeah, that's
Yeah.
that's how I see it
I
going.
like the point you made too about being consistent but not identical.
Right, exactly, exactly. And technology is a big deal, but one thing I'd like to point out is there's so many other things besides technology that you can do with a branch and put into a branch. And one of the things that we're seeing a lot of, which I think is I think this is cool to credit unions, you're not going to see banks do this, is a lot of them are putting in these community rooms like within their branch. So if they have a big branch, footprint and space and everything, they're updating their branches, but they're putting these community rooms that anybody can use. So anybody can come in and host a function or an event there. It gives somebody out, one of the members to bring in and hold, maybe they're hosting a meeting for a nonprofit or whatever it may be.
Mhm.
And that adds so much more value than necessarily just throwing in some iPads and like we'll put up all these and ITMs are great and everything, but like there are other ways to bring value, and people don't, and that actually can tie into even your digital presence, right? Because you're really thinking about the member as a whole and what can
Mhm.
you do and how can you serve them in even better ways when they come to the branch.
Yeah, absolutely. So if you have a community partner who,
Right.
offers some kind of mortgage deal or assistance or whatever,
Yeah.
that's the perfect way not only to help have a partner and tighten that relationship, but then, you're reaching more of their
Mhm.
beneficiaries, their members, if you will,
Exactly.
to potentially become your members. So yeah, love it. Um,
Yeah, and
and
there's one other thing that these community rooms are really helpful for is a lot of credit unions are using these as business incubators. So we're seeing the small businesses come in, and especially credit unions like Armco Credit Union out in Pennsylvania, they're using this as a big part of their business lending strategy.
mhm,
So they're helping these smaller businesses that maybe don't have space yet or don't have enough space. They're having them, they can come in, use the space for meetings and planning and collaboration. And I think there's one business that's using Armco's community room for their board meetings because
mhm.
they've grown a bit, but they don't have a space for this sort of thing. And you know, it's it's something that credit unions can do to help grow their community and help these small businesses grow and just help their communities grow.
Yeah, absolutely. It's so difficult being a small business.
Yeah.
Yeah.
I totally get that. So, Jay, not to I don't know, throw rain on this parade, but we've seen everything from terrorist attacks and increased natural disasters affecting credit union branches. Most recently we've had what, three, four hurricanes hit in the southeast down here. Um, and so and unfortunately, there's I don't want to say usual, but robberies. They happen kind of relatively frequently across the entire industry. Um, but excuse me, how do you account for those types of things in the building and design of an existing location or a new location, build, whatever? How do you design the security and technology around that?
Yeah, so I don't want to give the terrorists our secrets, but I can speak on the natural disasters and bank robberies.
Mhm.
So we do actually in both renovations and new construction, we do harden the branches against the natural disasters that are expected in the region. So for example, I'm thinking off the top of my head, Riverfall Credit Union down in Alabama. And this is a common feature for banks in their or branches in their situation, is their safety deposit box or their safety deposit box room is actually extra reinforced, both the walls, floor, and ceiling, to function as a tornado shelter. So, people outside or people in the branch can go there and hide and be safe during a tornado shelter. And we're seeing a lot of, we're doing a lot of, that's part of the, basic design conversation in branches and areas that are vulnerable to natural disasters. So
Mhm.
that's things like, hardening rooms against tornadoes or adding basement shelters or, whatever would be relevant for
Mhm.
that specific type of branch. Obviously, a Florida branch isn't going to have a basement, but
I,
um,
yeah.
and it always goes into the location selection is can this location support we what we do is part of the branching strategy conversation is we do build a list of requirements at the very beginning. So we do sort of like this like Moscow exercise, what this branch must have, should have, could have, and won't have. And this translates to a list of checklist items for the real estate search for building the short list. So if a building, a property can't check off all these boxes, then it's not going to be considered.
Hmm. Yeah, I mean,
And
things like hurricane ties or wild fires, not flowers. Well,
oh, wildfires. That's another. So
yeah.
out in the Pacific Northwest, we have a lot of wildfires. So we do have a smoke season. So Capo Community Credit Union went for a well certification on their latest big flagship branch. And basically, a part of this was they have you know, a really powerful natural filtered or outdoor filtered air circulation in the building that delivers clean air, free of pollutants or any pollen system. So they basically, went we went for the really, the best options for the, air filtration, water filtration, everything
Hmm.
like that. So when smoke season rolls through, the air's clear and breathable in this branch.
Is to worry about getting to it.
Yeah.
Yeah, yeah. Gotta get to it, but if you do, the air is definitely
Yeah, you guys could just put a
Overall,
giant bubble over the
right.
Pacific Northwest and have the
Right,
filtration going.
right.
yeah, we're all used to like, walking around, even like, I go mountain biking sometimes with an N95 mask on because I don't want to stay inside during the smoke season.
Yeah, so with that, love it. As you all know, I allow my guests to have final thoughts as we're closing up this discussion today. Why don't we start with you, Jay, and then let Whitney actually close it up.
I just realized I only answered half of the past question, so I
Oh,
can
my
also
bad.
answer. So as far as robbery prevention goes, the main goal is to make the credit union a less attractive target for bank robberies. So it's more of a psychological deterrent. That's kind of like the main deterrent. So, if you put yourself in the shoes of a bank robber, that's going to be, even, for a hardened criminal, that's going to be a fearful and nerve-wracking situation. And a lot of the designs and branching strategy goes to amplify those fears and concerns that the bank robber has. So one of the things we do is we make sure that the branches have open sight lines. So any of the staff members can see the street outside and the sidewalk, any area of the branch. So there's not really anywhere in the branch that someone can sort of like sit and hide and wait or prepare for their robbery. And this even goes to, I don't want to go into too much detail, but I can give one example. The check rate stands. So
Mm.
traditionally, you walk in and there's a check rate stand and it's facing the transaction area. Well, this is actually a really common area for bank robbers to case an institution, and that's actually where they usually write their notes. So one of the things is rotate that around so that the people writing checks are facing the door, and you deny the bank robber that opportunity to sort of observe the goings on in the branch without looking suspicious. So if they're standing there and watching things without doing anything, it's going to alert the branch staff.
Mm.
So what it's doing is it's, removing their ability to sort of like hype themselves up, understand what's going on in the branch. And that's just a major deterrent,
This-
as well as the universal associate model and
mhm.
having a greeter in the branch.
Mm.
So you'll notice like a big part of robbery deterrent also overlaps with excellent customer service. So one of the big attributes of a modern branch is that when you walk in, you're greeted by someone who will, ask you how you're doing, ask what you need help with, and guide you to either a transaction area or a conversational area. So when the bank robber comes in, they're expecting to, walk in, keep to themselves, quietly go up to the teller and hand over their note. But when they come into a modern branch, like, any of the branches we've built recently, they're going to be greeted by a greeter who's going to say, hi, welcome to X Credit Union. How can I help you today? What are your concerns? Whatever. And that's just a massive wet blanket on
Mhm, I bet.
uh,
Yeah.
um, bank robber. And I'm gonna leave the names anonymous because I don't want to, call anybody out. But we do have one client who is in sort of a rougher neighborhood where bank robberies and convenience store robberies, all sorts of robberies are unfortunately sort of regular occurrence. And the thing is, the banks that look most like banks are the most likely to be robbed. So we've got our client who is a universal associate model and has all the attributes of the branches that we've been talking about today. Uh, and they haven't been robbed once. Meanwhile, in, I think the past year, there have been half a dozen robberies at their peer institutions, one of which that actually got robbed so many times that they had to shut the branch down, had inch and a half thick ballistic glass separating the tellers from the customers. And that did not deter bank robbers at all.
Mhm,
And then there were a few other sort of traditional branch layouts
mhm.
that also got hit pretty hard, and it's pretty unfortunate. But by implementing these sort of psychological deterrents in the design, I believe that we've managed to protect and prevent a number of bank robberies.
Yeah, I think it's so interesting. It comes down to design more so than those physical barriers. That's interesting. So, as you all know, I allow my guests to have final thoughts. Whitney, I'm going to let you close us out. So, Jay, why don't you start?
Yeah, so my final thoughts is, we're sort of in a really interesting era for the credit union industry. So one of the things that's happening that's both an opportunity as a threat is the shift to digital. And as you know, digital banking, it used to be a competitive feature. Now it's just table stakes. And um, the institutions that miss the ball on uh, truly integrating the digital and physical member experience and providing like this, you know, comprehensive high touch service, they're at risk of becoming a commodity. So the thing is, when people are, you know, the first thing that a young person's going to do when they're looking at, you know, mortgages, they might Google it and see who has the cheapest rate. And a lot of times, you know, the conversation might end there. But if the credit union has managed to build a significant amount of trust, even if they don't have the lowest rate, you know, they're going to be the first person uh, that a member or prospective member will come when they're looking for things like a mortgage or facing other life milestones. And I think the CFPB has shown that a lot of people don't research, they'll research what rates are online, but 70% of people are not looking at the process of getting a mortgage or the things that they need to be aware of. And they're actually learning this information from the branch staff. So if you manage to build these relationships, get people to open the accounts, have a presence in the neighborhood, and manage to stand out in your community, you have the ability to capture this. You know, that's a significant amount of people that are just learning about, you know, the process of getting their first home loan or many other things. They're coming into the branch and you have the opportunity to capture that. So I think it's an opportunity to, you know, while a lot of uh, institutions, especially smaller institutions, are going to fall to this threat of commodification, the ones that really find their rhythm in the branching strategy and capture these, you know, relationships, they're going to succeed. And this is going to be an opportunity for them.
Yeah, excellent. Thank you, Jay. And Whitney?
If coming from the fintech world, and especially, and I know everybody's so tired of hearing about the pandemic, but coming from the fintech world and during the pandemic, I would have said that branches were going to go away. And I have learned more in the last, especially 14 months, the last 2 or 3 years, which is that's not true. They're not going to go away. They're going to stick around, but they are going to change. And I think that it's imperative as an industry for us to pay attention, you know, to what's going on, but to understand that people want to talk to other people. If they have a problem or if they have a goal and something they want to accomplish, they want that face-to-face interaction. And they're going to go into a location, into a branch, you know, to do that. And so what that means is we have an opportunity to capitalize on that, to build those relationships even more. And it just goes back to this whole, your strong digital presence, you still have to have a strong branch presence. And so I think one of my biggest takeaways is when you start looking at changing your branches and updating your branches or adding branches, talk to the experts, whoever they may be. Yes, we're a design build firm, but we have a lot, you know, we have a lot of other design build firms too. But what I would say is find the ones that are the experts, the ones that can take you from beginning to end, that can look at the strategy, that can come and say, hey, listen, you know, if X, Y, and Z is going to produce this result. We have a saying at Momentum is, you know, it's for the good of the project. So when you're looking for a partner and an expert to help you, make sure that you have found somebody that really understands that strategy and that no matter what, in the end, it's what is best for this project and for this credit union, whatever that may be. But going forward, yeah, I think branches could be in your branch strategy could end up being what makes or breaks a credit union or even our industry. So I think it's, you know, I think we really need to be paying attention to what's going on and making sure that, you know, we're there for our communities like we should be. And that is going to be having a physical presence, but we have to adapt to what's changing, right? And within our community and our industry as well. So yeah.
Awesome. Thank you all so much. I appreciate it. I think branching, as you guys kind of mentioned, people thought it was might go away. It is definitely not, especially for credit unions. So
Yep.
thank you all for joining me today. I
Thank
appreciate it.
you. Thanks,
Thank
Sarah.
you.
Thank
Thank
you, Jay.
you.
All righty.
Thanks.
Have a great rest of your day.
You.